talk about the state of private equity right now. We bring in two in-house experts, Bloomberg's Iyan and also Zach Miter. Iyan, I should mention you are a senior analyst, and Zach is an M&A reporter. So, Zach, you're saying basically everyone in private equity is talking about this idea that mega deals might be back.
That's right. Over the past month or so, this is all private equity people have been talking about, and some of the big private equity firms are looking at $10 billion plus deals all across industries, from consumer to media.
Because we haven't seen this since 2007, right? This size.
That's right. In fact, there's only been a couple of years in the whole history of the economy that there have ever been deals of this size, and to see them come back now so quickly after the financial crisis snuffed them out is really staggering.
It's pretty, okay. Now, Iyan, we know you're a senior analyst, so you look at a lot of numbers, you're doing a lot of cross-checking. What do those figures show? I mean, are the statistics telling the same story?
Yeah, I guess from my perspective as a numbers guy, consider me a bit of a skeptic. You know, I'm seeing what we see in our world is what I call the mini-me deals, the mini mega deals, $1 billion, $2 billion to $5 billion deals. So I would like to see the Fidelity deal come to market. And if that comes to market, although one deal does not make a trend, you know, then we start talking. And we would like to see the kind of financing that would be put together for a plus $10 billion deal. That would be significant, as Zach says.
But as statistics show, you're saying maybe this is more froth than substance. At least right now, that's a call.
At least right now. The truth is the numbers in private equity are up across the board. If you look at the first 4 months of this year, we're already about halfway through what we've covered in the entire 2009. So year-over-year comparable period, deals in private equity are up about 48% in volume, 47% in deal count. So the deals are there. But if you look at where the deals are, they're mostly in your classic private equity deals, which is a corporate divestiture of a non-core asset, where you have a Blackstone takeover SeaWorld from Anheuser-Busch, that kind of deal. You're seeing a lot more of that, and that can sustain the market. That's pretty significant.
So it looks like things are getting better, but Zach, you and I spoke on the phone as well, and you're saying, look, there's still some challenges out there. I mean, the leveraged loan market, it's better, right? But it's still not great, and this old private equity joke still sort of stands, like, okay, private equity firms have a lot of money, but they just can't spend it right now.
That's right, and for the biggest private equity firms, they don't want to be doing billion-dollar deals because they have $20 billion funds, and they want to be able to put large chunks of that money to work. There's about $500 billion of committed capital around the world that private equity has to spend, and they want the mega deals to come back because they can put large amounts of their money to work in one deal. Because
it's still hard to kind of get out on the back end of these deals, right, when the equity market is not as favorable as it could be.
That's right. I mean, HCA filed for its IPO on Friday. That would be the biggest IPO in a couple years. That was taken private by KKR a few years ago. But it's still unclear with the turmoil in the markets last week, you know, whether a lot of these private equity firms are going to be able to exit this year.
Now, one private equity firm that is either very smart or very lucky and did get an exit deal is Elevation Partners. We know it because U2, Bono, I mean, it has some rock star status, some rock star founders. They lucked out or smarted out, we're not sure quite, with Hewlett-Packard's purchase of Palm, which looked like a dying animal. But Elevation has actually managed to eke out a slight profit on this deal. And Iyan, I mean, you said Elevation has this weirdo kind of hybrid model of PE firms. How does it fit in the structure of what we're seeing right now?
I'm not sure entirely, because according to them, you know, they're not just another buyout shop. And at the same time, they're not just another traditional venture capital firm that makes 10 investments, assuming that 7 will not be realized, and, you know, 1 or 2 of them will be Google. Whereas they're not doing your typical, you know, large cap buyouts as well. So they're trying to add value. They're trying to occupy a sweet spot where they bring their operational expertise to bear. And that was supposedly the plan with Palm. That didn't quite work out with a lot of the problems with distribution and rollout to Verizon and things of that nature. But, you know, you're going to see venture capital and private equity firms have to rationalize what they do.
All right, Iyan and Zach, thank you very much.